Angela, single mom from San Mateo, bought a simple life insurance policy in her 40s to make sure her son would be taken care of if something happened to her. Years later, she added something called a living benefits rider. In her 60s, Angela was diagnosed with a chronic illness that made it hard for her to live independently. Because of the rider, she was able to access part of her life insurance death benefit early. That money paid for in home care so she could stay in her house instead of moving to assisted living immediately. Her son told me that rider gave us time to plan, time to breathe, and time for mom to stay home longer. Most families have no idea this option even exists, but it can make all the difference. Hi, I'm Dale Corpus, a Senior Transition Specialist and real estate expert based in the San Francisco Bay Area. This is another episode of Sandwich Generation Solutions, powered by the Simplify Senior Transitions podcast, where I give you real stories, expert insights, and practical strategies to help families like yours plan for the future with confidence. Today, we're diving into the hidden power of living benefit riders, an often overlooked way to add long-term care protection to life insurance or annuities. A living benefits rider, sometimes called a chronic illness or LTC rider, is an add-on to a life insurance policy or annuity. Here's how it works. If you become chronically ill and can't perform basic activities of daily living, you can access part of your death benefit early. Instead of the payout only going to your beneficiaries after death, you can use some of it during your lifetime to pay for care. Think of it as unlocking the life insurance you've been paying into while you're still alive and need the most. Traditional LTC insurance is a separate standalone policy. How they differ from traditional or hybrid policies. Traditional LTC insurance equals a separate standalone policy. Hybrid policies equal life insurance plus LTC benefits built in. Living benefit riders equal an add-on to something you may already own. The difference? Cost and simplicity. Traditional is the most robust, but it's use it or lose it. Hybrid, it solves use it or lose it, but it's more expensive. Riders are a flexible, cheaper add-on, but they usually offer less coverage. Let's take another fictional Bay Area story. Victor, a single dad in Fremont, had a $500,000 life insurance policy. In his 70s, he developed Parkinson's. With a living benefits rider, he accessed $200,000 of his death benefit early to pay for in-home caregivers and physical therapy. When Victor passed, his children still received the remaining $300,000. Without the rider, Victor would have had to drain his savings first or move into assisted living sooner. Here are the pros of living benefit riders. 1. Affordable. Riders usually add a small cost compared to a whole new LTC policy. 2. Simple. If you already have life insurance, it's often just an add-on. 3. Flexible. You get to use your own policy money for care. 4. Legacy plus care. Your family still receives what's left of the death benefit. Here are the cons of living benefit riders. 1, it reduces death benefit. Whatever you use for care reduces what your family inherits. 2, they're not as comprehensive. Doesn't usually provide as much LTC coverage as a standalone or hybrid. 3, eligibility matters. You often need to qualify based on health. 4, policy-specific rules. Some riders only cover chronic illness, not cognitive decline. So who does this work for? Living benefit riders can be a smart fit for families who already own life insurance and don't want a whole new policy, singles or widows who want flexibility, people looking for an affordable, low-commitment way to add protection. In the Bay Area, where costs are sky high, even a partial payout can buy families time and breathing room. Most people think of life insurance as something only useful after death. They don't realize modern policies can be living tools as well. And many insurance agents don't emphasize riders, so families overlook them completely. This is why I always encourage people to review their existing policies. You might already have options you didn't know were there. Here in Contra Costa, Alameda, and Santa Clara counties, the average assisted living cost can easily hit $8,000 to $10,000 a month. Even if a rider only provides $100,000 or $200,000 in accelerated benefits, that could cover over a year of care. That kind of relief buys families time to make thoughtful decisions instead of rushing into crisis mode. Okay, let's recap. This is what we covered today. 1. Living benefit riders let you tap into your life insurance while you're alive if you need care. 2. They're cheaper and simpler than standalone LTC insurance. 3. The pros are that they're affordable, flexible, legacy plus care. 4. The cons are they are less comprehensive, they reduce death benefit, and have health qualifications. 5. They're perfect for families who already own life insurance or want a low-cost add-on. This has been another episode of Sandwich Generation Solutions powered by the Simplify Senior Transitions podcast. If your loved one is considering senior living and you need to figure out what to do with their home, let's talk. Schedule a free consultation and learn more about my services at www.simplifyseniortransitions.com. Have a quick question? DM me on Instagram at soldbydale. And don't forget, you can also listen to the Simplify Senior Transitions podcast on YouTube, Spotify, Apple Podcasts, and all major platforms. If you found this valuable, hit like, subscribe, and share it with someone who needs to hear it. Thanks for tuning in, and I'll see you on the next episode.